Bearish Harami pattern. Now it looks something like this. Bearish Harami is a complex pattern. It's not a simple pattern. It is a complex pattern. And by complex, it means it has the power to change things fast. In it, the first candle is an unusually large green body candle. So in the first day, you're extremely bullish. You're like, oh God, it's going to make me more money. Buy more, buy more. It's a bullish candle. Followed by a second small red body candle. Now that's where you see and you get confused. Okay, what really happened? This second candle is formed within the large green candle. Now this brings an extreme thinking into your head. You are like, what? Why on earth is it formed within the large green candle? Now this pattern is a bearish pattern when followed by an uptrend. Why is it a bearish pattern? Because on the first day you were extremely bullish, but then it opens lower and closes not on the high point or not crossing the previous high, but within the green candle. So basically all the gains that you made on the green candle, 50% or 30% or 70% are gone. So now you are back to square one. Now in an uptrend, usually this doesn't happen. Why would this happen that it is opening lower? Because in an uptrend, everyone is bullish. So who the hell would want the price to open lower? No one. But if it is opening lower, then there is something that you don't know. And that's why this pattern gains importance. Because this is a pattern that tells you in a bull run, it is doing something that is not normal. And that's why Bearish Harami is one of the most popular pattern. Because although you don't understand why it is doing this, you can still make money through it. Because it's a pattern that changes the game. Now I will show you this pattern on chart so that you can see and understand how powerful it is. Bearish Harami. Now, this is an important pattern because if it happens, then there is a serious doubt that the uptrend will go up. Basically, whenever this pattern happens, it means that the uptrend have lost stream. And just look at it right here. This is a large white body followed by a small black body, a small red body. And after that, after this pattern, market falls. And if you will find in the history, you will find this pattern to be exceptionally powerful. Once this happens, the market falls. And this is the first complex pattern that we are discussing. And the reason being, it is extremely powerful and extremely popular. Just look at it. This is a huge rise up. After that, the red candle was a smaller one, but it opened lower and closed low, even lower. Now in this candle, you can see it opened at 53.66 but closed at 55.09. So that's what, $1.60, $1.50. That's huge. That's a 3% rise. But the next day, it closed previous day it closed at 55.09, but the next day it closed at it opened at 54.77, which is 40 cents lower. That's huge. And then it closed on that day even lower at 54.40. So at the closing on this day, you would have seen that this pattern is forming, which is not good. And it would have been your way out, because you can see this was a reversal pattern, and that's exactly what happened. It was rising previously from October 2015, and then it was going straight. On straight it happened, and boom, it goes lower. So that's why this pattern is extremely powerful. because it is what I call the trend stopper. And once it happened, the uptrend stopped and the downtrend started. Thank you.